Hello everybody and welcome back to the end of session markups for 25th of July on a Tuesday. Before we start, if you haven't checked out my latest series masterclass part 2 on change of characters and chalk and how do we use them and where do we use them, please do check that out so all my analysis and markups make sense to you a little bit more in depth. And also, if you like the content, please do leave a comment, like and subscribe. That really helps the channel. So let's get to it. What do we have here on the 4H? But in fact, on the daily, in fact, break of structure, a massive impulse. We have a pullback, and now we are waiting for the next push to start to have another break of structure right here. Yeah, there is no indication right now that this low, protected low, is weak over here. So there is no indication, but then again on a daily there is not a lot of information that we can get from the lower time frames. So let's jump on to the lower time frames. What do we see on the 4H? On the 4H this morning, when I came to the charts right here, we had formed a 4H chalk over here. And if you don't understand what chalks are, please do check out the video that I have posted at the end of the series and also in the descriptions. So once we have the chalk, we are anticipating, and we also had the 1H chalk, by the way, so we are anticipating a deeper pullback into this 4H demand zone that we had. So we had a protected leg, break of structure. We were looking and anticipating a pullback. We had a lovely pullback. There was a bunch of trades over here. And then this would be the last demand that needs to hold for that next push to start. So this very well could be the next lower high for that daily break of structure or this 4H swing structure to start. Okay, so at this point in time, we are here. Not really much going on. We had the 4H chalk, so there is some indication that the price is pulling back deeper. But the plan is that I do not want to be buying or selling at this point in time because we are heavily in the discount of the 4H swing leg, and then also on the discount of the 1H, which I'll show right now. So let's move on to the 1H. Okay, so we are on the 25th. And at this point in time, right? So we had a mitigation into the demand of the 4H, and this was a nice 1H supply. So this high, so this low broke, made this internal lower high, and then it made an internal lower low, right? So we are talking about internal. We are not even talking about the swing 1H legs right now. So we're just talking about internals, right? I wonder why this keeps moving, but nonetheless, let's zoom this in a little bit. Okay, so once this lower high breaks this previous lower low and creates a new lower low, what do we have here? We have a chalk, a 1H chalk at this point in time, right? So this high broke this high, this high broke this high, this high broke this high, and even if this high did not break, so we had either a 1H chalk over here or over here, depending how you look at the wicks or the bodies, and then we had a massive drop. So this indeed is definitely an interest area, point of interest. We had a nice reaction from the zone. No entry plan for me at this point in time. There's nothing going on here on the 15 minutes. So if I switched into 15 minutes just to see, nothing really happened, right? So it went up, pushed down, straight up, okay? So let's go to 1H again. So on the 1H, what do we have? We have another push. This, because now this is the lowest of this entire range right now. We look at where the change of character is going to happen on the 1H and the 4H, right? Because the price is heavily bearish. In order for me to play longs, which is what my higher time frame narratives is telling me, that we're going to have a reaction from this demand zone. We are in a bullish swing structure. But the price internally is heavily bearish. So for me, in order to get into the longs, which I'm interested in today, I would need to see a very solid reaction or a confirmation of that is going to happen, or an initial indication. And where do I get this indication? So from this point, lower low, this low break, this low broke, this low broke, this low, this low broke, this low, this low broke, this low. But again, this wick had already been taken. So this was my point where we would have a 1H chalk, and incidentally it's also a place of the 4H chalk. So this is where the range was, right? So when we came in today at about 5, 6, 7, 8, 9, At this point in time, what do we have? My range is here, my fractal range is here. So when we came in today, I'm not doing much, right? I'm just waiting because this is my range. And then we have, let me get rid of these little things. This right there and this right there. So what do we have? We had that change in character, the 4A chalk, which created basically a new supply zone, sorry, demand zone over here. So if I drew that again, this would be my new demand zone, right? At this point in time, okay? So let's call that 1H demand zone. Now, there were a couple of trades that we could have gotten involved into. There was definitely a short, but a short was lower probability, so it would have been a quick scalp. So let's study this price action. When price went into this pH in the point of area, what did we do? While going up, we had a broken structure, right? So we took out this internal, actually strong liquidity, because this high was responsible for breaking this low. So there is definitely some level of strong liquidity sitting up there. So if I went into the 15-minute, we have a nice setup here. So what do we have? We took out this liquidity, we mitigated, we had a V-shaped reaction, yeah? And this was the last demand that took out this liquidity. So once this supply falls short over here, we can mark from the fail of the reaction to the height of the reaction. Once it fails, we could do a short position right here, 25%, like I like to do, and then we leave 1 pip on top, and then we could have easily gone to this lower demand. The reason why I say this, that we could have gone to this demand zone, is because this is a quick scalp play. The entry model set up pretty nicely, and this is one of the beauties on the 15-minute, right? You could get trades in both directions. You could be long biased, but if you have an opportunity for short, why not take it? Because the next area or the next demand of supply gives you enough range to have those 2 and 3 hours fairly quickly. Okay, so this would have been 2 hours. I would have definitely closed out, not gone beyond that just before this demand. I did not take this trade because I was not at the charts at the time, and I really did not fancy shorting in when my bias for the day is longs. So what happened after that? So we came in, into this demand zone, right? So this demand zone was responsible for breaking this high, took out this liquidity. So if I went to the 1H, this was the demand that was responsible for taking this high. So the last pivot candle, right? So, and we need to see if there is going to be a strong reaction. So let me actually put this on the side over here to help you guys understand, to make things a little bit more clear. So at this point in time, price does creep into this. And what do we have? So let's go to 15 minutes. Price very nicely goes in, has a reaction, doesn't quite touch the edge of that zone, goes up, and then it has a drop, right? So at this point in time, what's happening is that we took out this inducement, liquidity, whatever you want to call it. So it's on the 15 minutes, so let's call that out. 15-minute liquidity, very important for me to enter. We then had a good reaction, right, from the zone, a nice V-shaped reaction. We know that this was the supply, right, that took out this liquidity. So we are wanting this to fail, and then also we have the chalk over here. This is the line that I had drawn for my alert to go off when we have that chalk, right? So this would be the place that I would be interested in for that chalk to happen, okay? So I'm going to label that. Give me 1 second. 15-minute chalk. So price comes in, takes out this liquidity. This is the last supply that took out this liquidity. We have V-shaped reaction. There is a new demand supply created over here. So we do expect a reaction from this zone. So we did get a reaction. And at that point in time, it gave us a nice chalk. So where do I enter? What I had done was I took this high from the failure of the reaction to this low as such, because this is where the reaction failed, and this was the lowest part of that reaction, because if I look at it, this demand zone over here, this has already failed, right? So this demand right there is already mitigated by this wick, right? So for me, I was not interested really in this. So at this point in time, I was waiting for this. And this is one of the most annoying things that I had to go through today. I had placed my order, a limit order right here, and I had a very nice stop loss, 12.5. I had given it a 14 pip stop loss just for some buffer, and I was targeting what? My technical target, I was targeting this week high, right? So just very simple here or here. This is where I was going at. So we already had a 2 point something over here, and then a 3.94 and a 4 over there, right? So this was a simple fair play, and not much going on, just a very simple tight fair play. What happened with me today? And this it's part of the trading, folks. Price for me, I had the limit order on my MetaTrader for it came in like this. Right, it barely skimmed my edge on MetaTrader. It was, I think, a pipette or something, and I was not tagged in, and the price just flew. So the frustration of all of this is that you wait the entire day, you're monitoring charts, you know what to look for, and when that action is set up, you're kind of rubbing your hands and you're all ready to go, and you have your order placed, and we're going to get tagged in and it's going to fly. It played out exactly how I had planned. I was long bias, everything on the daily, the 4H, the 1H told me that you're long bias. I waited for my mitigation. I waited for the liquidity grab. I waited for the chalk to happen, and then I waited, entered on a 25%, and I just missed it. But there's the beauty of it also. And the beauty of it is that your analysis played out perfectly. So I'm confident that whatever I predicted happened based on not just whims and fancies, but actually decoding the multi-time frame, and then also looking at supplies and demands, premium, discount, and your entry models. This would happen every now and then, but you shouldn't lose heart. Just like my frustrating, yes, but another day, and we'll have more opportunities like this to set up. One last thing I would want to say over here is that this sort of should give you more confidence in your analysis, right? So if you're not tagged in, but the analysis plays out, that's a win in my book, because you're learning and you're implementing what you've learned, and that implementation is playing out how you anticipated. What is a bigger win than this, other than actually getting tagged in and making some money? All right, guys, you all have a good one. Cheers. Bye-bye now.